Where have we been and where are we going? 2021 was the hottest real estate market we have ever experienced. And then 2022 began and got even hotter because of our ridiculously low inventory levels and fueled by low interest rates at 3.25%. Today, we currently have about 1 million properties for sale across the United States. This graph shows we are approximately 35% below our inventory started at the onset of the pandemic about 2 years ago, when we had about 1.5 million properties for sale. During the Great Recession back in 2008, we had about 4 million properties for sale. The good news is our inventory levels have risen in the last 6 months, but we are still dealing with a major shortage of housing. Specifically in our local Orange County market, we have about 3,600 homes currently available for sale. Compare that to the Great Recession when we had upwards of 18,000 homes for sale. This further supports the fact that we will not have a wave of foreclosures. Even though we have muted demand, our supply is so low, it's keeping home values strong. Today, there are 9 distressed properties in all of Orange County compared to close to 6,000 distressed properties in 2008 during the Great Recession, when 1/3 of all homes on the market were underwater. This is an ongoing string of messaging that there is not a wave of foreclosures coming and we are not in a housing bubble. A few months back, interest rates maxed out at 7.3% and have been trending lower, back down to the low 6 percentiles. As you can see here, what is happening is that homeowners are hunkering down and not selling or moving due to all the uncertainties in the market and the headlines in the news. We spoke about inventory and interest rates. Let's talk about demand. Demand is exceptionally muted and off by 35% in Orange County from the 3-year average prior to COVID. Right now, as a home seller, pricing your property properly when going to market is critical. If you have to lower your price to get to the sold number, you will end up selling for less than if you would have priced it correctly out of the gates. Take a look at this. This data was pulled from the homes sold in Southern California from the month of October 2022. 61% of homes that came to the market that were priced right and were in good condition sold at over 99% of their list price and were on the market for an average of only 9 days. Those that had to reduce their price of their home by 1 to 4% closed at 94.6% of the original list price and were on the market for 43 days. And those that had to lower their prices by over 5% or more got only 87% of the list price, and days on market reached upwards of 2 months. Let's dig even deeper on this. If we use the example of a $1 million home in this scenario, if those that priced their homes correctly and it was in good condition based on this data would have netted $991,000. Those that had to reduce their price by 1 to 4% would have received $974,000, and those that had to reduce the price by 5% or more would have walked away with $967,000. You can see from this example that having to reduce the price later can really cut profits. For you home buyers, in today's market, you have more options and more time to make your decisions, but don't wait too long. Properly priced homes that are in good condition, they won't stay on the market for long. So it's important to be ready for when that perfect home comes along to be able to make quick decisions and make it happen. What's going to happen in 2023 is interest rates are projected to continue to fall. We're not likely going to see a 3 or 4% interest rates anytime soon, but once we get back to that mid-low 5 percentiles, watch out. If we maintain these low levels of inventory, the market could heat right back up again. A little bit of strategy and planning goes a long way in this tricky market. If you've been thinking about buying or selling, let's talk. Let's create a strategy to set you up for success with all your real estate goals in 2023.